And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Monday, July the 25th. My name is John Hoagland. Thanks for trusting me with your time. As always, the extreme importance of understanding context, having good risk management, and exercising patience is top of my mind this morning and hopefully top of yours as well. It is going to be an interesting and challenging week this week. My goal is to stay out of trouble. It's Hire a Veteran Day today, if you didn't know that. It's a very good day. But as far as economic information, today, not a whole lot. 7:30, we had the Chicago Fed Manufacturing Index come out. 9 o'clock, we have the Dallas Fed Manufacturing Survey. However, this week, we've got lots and lots and lots of economic information. We also have tons of important earnings. Just to go over what we've got, we talked about today. Tomorrow, the FOMC meeting begins. We've got Case-Shiller home prices tomorrow, FHFA house price index tomorrow, consumer confidence, new home sales, and Richmond Fed manufacturing index all tomorrow. Wednesday, durable goods orders, international trade in goods, wholesale inventories, pending home sales, EIA petroleum status report, and then at 1 p.m. Wednesday, the FOMC announcement, followed by the Fed chair presser at 1:30 Central Time. Thursday, GDP. Everybody waiting for the GDP number right after the FOMC meeting. Jobless claims as usual on Thursday, and then followed by the natural gas report. Friday, personal income and outlays, employment cost index, Chicago PMI, and the Michigan consumer sentiment. On top of that, we have some very important earnings due out this week. Just want to go through and go kind of day by day here and see what we've got. Nothing all that important today, even coming into the close. Nothing too tremendous, but we have Coca-Cola tomorrow morning, McDonald's, United Parcel Service, Raytheon Technologies, Unilever, General Electric, all tomorrow before the open. Tomorrow after the close, Microsoft, Google, Visa, Texas Instruments, some majors tomorrow after the close. Tomorrow, let me get this lined up correctly here. There's such a long list, just huge lists of earnings every day. Where are we now? We're on Wednesday. T-Mobile, Bristol-Myers, ADP, GlaxoSmithKline, CME Group, all before the open. Humana, before the open. Coming into the close, Meta, Qualcomm, Ford Motors. That's Wednesday. Thursday, we have Apple after the close, Amazon after the close, Nestle before the markets open, Merck before the markets open. Big earnings this week. So there's going to be a lot of very interesting things going on in the markets. I'm calling today the calm before the storm because we don't really have any important economic numbers. It's going to give the major players, the hedgers and larger speculators, the opportunity to hedge themselves and to position themselves to protect themselves for whatever is going to happen this week. Lacey, come on, girl. Come on. I got a little cut on my leg that she's focusing on right now, so she's always looking out for me. So we're set to open higher this morning. Again, a week rich with economic data, lots of earnings. The Fed meeting is a 2-day meeting expected to yield a 75 basis point increase in rates. The GDP looking now, the expectation is there may be a little bit of a boost in GDP, 0.4% positive. I'm not sure if I buy that, but if we do have a drop in GDP, a negative number, that's going to be 2 quarters. And that to me is saying that it is a recession. Lots of people arguing the narrative, whether there's actually a recession. And it's really going to come to on Thursday, that GDP number. If we have a loss in GDP, that's 2 quarters in a row with a contracting economy. That to me is a recession. So we'll have to see. Crude prices have recovered early losses. I guess after Libya has increased output, so a little bit of a down move there, but they've recovered those losses. We are going to have quite the trading week. I'm really looking forward to the opportunities, and I got to remember to just try and stay patient and remain positive on the week. I'm not going to try and hit a home run this week. I'm going to trade what the market is telling me, and we're going to take a look at those in the charts very shortly. As always, please make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. You can subscribe to our YouTube channel so you get notified when we do go live. The VIX is actually up this morning, about 3.4% last I checked at 2383. Not a very high number. I find it interesting that it's higher this morning. The dollar index is a little bit lower at 106.38, and the yield on the 10-year holding just below that 3% level at 2.8%. Good morning to everybody. Shaw, you're the first in the room. You win the prize. Happy Monday to you. Theo, Dan Trader, thank you very much. Yeah, go ahead and hit that like button if you'd like to. Chilling with Dylan. You know, I always say if you enjoy the market forecast, tell everybody. If you don't, tell me. Always looking for feedback on how to improve the market forecast. Group coaching, make Hogue money, recap, all of these things that we do, we're always looking to improve. So, chilling with Dylan. Good morning, Frederico, Dimitar, Brian, George Duque. Good morning, Spencer, Scott saw and he conquered. Anthony Seidel. Good morning, Patrick. Yeah, too late for the cookie so far, but you'll get it. Dan Trader, Glitter Sandwich, good morning. Brody, Bill Phillips, Bob Rudder, good morning. Patient Traders, yes. Glitter Sandwich, was that the value area special situation play on Friday in the ES? Because we didn't open outside of range, we actually kind of opened in a late spike that did not provide bigger opportunity. But once we found value inside of Thursday's area of value, I would call that a special situation trade. It's always about rejection or acceptance of previous day's range when it comes to that. It's to be a true value area special situation play. I think we need to open flat out outside of the previous regular trading hour session, which we did not do. Doesn't make it invalid totally. Just a more of a higher probability if you open outside of range and re-accept inside. But we did complete the value area special situation day on Friday, 100% for sure. Zareen, Vince, good morning. Sarah Hall, good morning. Prayers and love to you. Tachyon down 785 for practice account on Friday. Got too aggressive and impatient. Valuable learning experience. It feels like I hit a wall of procrastination. I will not trade today. Need to relax. Okay, that's all right. You know, Friday was a hard day because we've been seeing the market continuing to rally on positive open interest. The idea that we opened in the late spike and we didn't go. Sometimes it takes some time for the late spike to actually play out. I don't know what's going to happen today. I'm kind of suspecting that the market is going to find a range and going to pretty much stay there because not a lot of information due out today, and we know what we've got coming at us this week. So it was a tough day on Friday, Tachyon, and you had a tough day. It's okay. just keep looking left. If you keep looking left, you may find something that may have offered you the opportunity to protect yourself a little bit more, or actually get on the right side of things. Anissa, Trading Research. Oh, thank you. Nice T-shirt. Yeah, it's a new one. It's a new one. I'm allergic to shopping. My wife gets all these for me, so thank you. Ron Terry Haggle Matters, good morning. Joe, good morning. Is the spike on 30 candle? Okay, Joe, any late spike is the last 30-minute bar of any market. So in the S&P, I look at the late spike as the 2:30 to 3 p.m. central bar. In let's say crude oil, it's the 1 to 130 bar. In gold, it's really the 12 to 1230 bar, but there's sometimes a lot of information that happens after that in gold, so that's a little bit subjective. Jules, good morning. Rusty Golfer, Grim Reaper Trader, Jerry is awake, Denise, Rob T, Dan Trader, Lacey, yeah, she is. She's here looking for a human. She's right here. Good morning, JD. Always a pleasure to see you. Good morning, Rick, my brother. Love you. Manuel Caesar. Tyler. Good morning, my friends. Is the one group I don't sound crazy hypothesizing my outlooks with. Good. Well, we want you to feel comfortable here. Absolutely. Alfred, do you measure overnight trading from 4 p.m. close or 6 p.m.? Okay, in Central Time, it would be 5 p.m. Overnight trading begins at 5 p.m., not the close, nor is it settlement. It's when the market reopens. On the East Coast, 6 p.m. I watched Uncle Buck this weekend. I couldn't help but ask you, how did traders put in trades back in the 80s without the use of the technology and internet we have today? Well, it was human to human, man. We just were... hands in, we're buyers, hands out, we're sellers. Anything on the head or the face was a quantity. Anything away from the face was a price. So you could say, hey, I'll sell 10 and a half, sell 10 and a half. Somebody else on the other side of the pit may go, buy them. You go, sell you 10. We'd tell the exchange, we traded half. We'd write them down. We'd check with each other. Hey, checking, I sold you 10. Yeah? Okay, so we'd check the trade. It was just human to human. It was it seemed like chaos, but it was actually really very organized. Uncle Buck, one of my favorite movies. You get in your mouse and get out of here. Yes. And Joe, yes, 230 bar, right, for crude oil. Yes, the 1 to 130, 230 bar central for the S&Ps, correct. Chris, good morning. Tyler, attach the order to a pigeon and send it off. Sometimes it seemed that way. There were orders that were flashed into the pit. There were orders that were brought in on paper, and you'd have this deck of paper, and as the price moved, you could peel it off and fill it, and it was an era for sure. An era for sure. All right. Grim Reaper, good to see you. Today is group coaching. There's the link to get into group coaching. Make sure that you get in there. And I have to adjust the Zoom meeting still so that you can sign up once and you can attend them all through the end of the year. I still haven't had the opportunity to do that just yet, but I'll make sure and get that done today. Hopefully it won't change the link. If it does, we'll let you know. One last thing. Last week, I announced, and you were the first ones to find out because you're watching the market forecast, that we've gone from an 80-10 to a 80-20 to a 90-10 profit split. After your first $5,000 in profits, you're going to get 90% of your profits thereafter, not 80%. We also have an announcement that we are hastening our process. When you take money, okay, when you pull out money, you're going to get it even faster. Now, there's things that we can't control, your bank, different things like that. But if you send in a request by 10 o'clock, it's going to be processed that day. So sometimes it takes 2-3 days for you to get your cash. We want to get you your cash even faster. So that's the latest announcement for this week. We're looking forward to getting you the cash as fast as we can. We know this is hard work. We want you to get paid. All right, let's take a look into the S&Ps now. I'm going to put up the daily chart. So these markets were really, really fascinating last week because I don't know about everybody else, but I was sensing a change in the marketplace. We had equities adding open interest, adding volume on up moves. Every up move since we've put in the high back at the beginning of the year, we've been cutting off volume. We've been cutting off open interest. Last week, we had a change in that. This breakout provided open interest increase, open interest increase, open interest increase. Friday on the pullback, we lost open interest, 19,000. So we were kind of wondering if we were going to see some profit taking on Friday. And I believe that's exactly what happened. I don't think it was a major change in direction. It was an inside day, inside body here. So I'm not that worried about it. Now, equities are facing a storm of data this week. We know this. This is a third day in balance. We've got inside extended trading hour range. We have inside regular trading hour range. So really, we're starting off as one might expect with the number of the amount of information as far as earnings and economic numbers, that we may just kind of range here today and everybody can get themselves positioned and hedged for whatever's going to happen this week. So I've got it written here in my notes. Earnings and FOMC and GDP, oh my, it's almost like lions and tigers and bears, oh my. Well, here's the 30-minute chart. Now, we always got to be thinking, what direction is the market attempting to go and how good of a job is it doing getting there? When we go back to this daily chart, we had a big up move that broke us out of the area of balance that we've been and added open interest. We added open interest. We added open interest. So we're putting in overlapping to higher trades, higher ranges. We're one time framing higher from Monday all the way through the end of the week. Even on Friday, the pullback in extended trading hours was overlapping to higher. We're inside that today. How good of a job is the market doing? Well, I'm a little unhappy because with the amount of space that we had above this market in these two big down days, there was a lot of space to bring us up to weekly kickoff high, which did not happen. So, maybe just because we know what we've got coming at us this week, we settled down and we're taking our time here. So here's last week. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, big up day, open interest. Up day, open interest. Up day, open interest. Pullback, open interest drop. Is that just some profit taking from the week? I would have to say that was a big part of it. Where are we today? Settlement is 39.65 even. We're above settlement. We're holding some overnight longs here. We're inside range, we're inside value, and it looks like we're opening inside an area that would bode for repair. We got our volume point of control up here at 39.97. We've got a couple of high volume nodes down here. I would say 39.57 would be our highest high volume node down here, and we're opening in the middle of it. So we may fall into repair. We're in range, we're in value, suggesting patience. I think today might end up being the calm before the storm. Looking at crude oil now. Okay. We've got a medium time frame balance here. Short time frame download structure remains. We got an overnight test of last week's low. Okay, overlapping to lower range. Open interest indicates new shorts on Friday. So we added approximately 11,000 in open interest on Friday, getting us a little bit too cheap here. Okay, here's our test to last week's low and rejection. We've got weakness in structure all around us, mostly to the downside. And we've got a late spike. here's our late spike. That late spike base is 9,500. The start of it is up here at 9,559. We are opening above it. It is showing signs of rejection of lower pricing already. We've opened. Did we leave the opening range at the low of the session? So far we have, and it's a huge opening range. 65 ticks or something like that. That's just insane. I'm not going to be playing that opening range in its entirety, but here we took a look above it. We took a look right back down to this. This gives you an opportunity to take this cheap trade. I mean, it came down to 96.16. 11 is the low. That gives you 5, 10 ticks with which to risk when we get this move back to the low of the opening range. We don't know what's going to happen. We've taken out the highs here. We've taken out the overnight high, it looks like, and we've rejected. So I'm really not that interested in trading this opening range trade. All righty. Let's go back here. Let's take a look at the 30-minute chart. So that late spike is showing rejection. I'm thinking that I'm going to need to look for opportunities to buy weakness in this market. Overnight inventory, what did we get to? We started here. We're here. We took the long way. I'm not thinking that there's a large number of overnight inventory with which to deal with. We're in range. We're in value. Anytime we're inside value, it suggests to me that we're likely to find better trade locations as the day goes on. I feel as though I can just relax, let the market come to me and tell me something again as the day goes on when we open inside value. Okay, we're in range and in value, but rejecting the late spike may change that just a little bit. I'm going to be looking for opportunities to buy weakness as long as we hold the late spike. Again, the low of the late spike was the low of yesterday, 94.58. If we get a move back to settlement, that might be an opportunity for us. The question about repair. When we have... we don't really... Well, yeah, I guess we do. We have largely a double distribution trend day here, okay? This is the market profile from Friday. We have a little line of single TPOs here. But when we open between the distributions of time and volume in a double distribution trend day, there's a tendency for the market to trade to and check at least one of these points of control, if not both. So we're opening right here. If we were to open now, we'd be opening at 39.78, which is between them. Now here's a situation where we opened. The first thing we did was tested this high volume node and this point of control on this upper distribution. Then we tried to get to the volume or a point of control in this lower distribution, and we were unable to get there. So that's information. If we do something similar to that today, let's say we open, we get to the upper, the point of control for the upper distribution here, and we can't get to the lower distribution, that may be telling us something very similar to that. We get to the lower point of control in the lower distribution down here, and we can't reach the upper distribution at some point. That is also something that may be telling us something. We have to remember when the market is not accomplishing an expected outcome, that there's news in that. What doesn't happen is equally as important as what does. Okay, so here we are. We're right in the middle here, falling into perhaps a little bit of repair today, especially knowing what we're facing the rest of the week. On to the NASDAQ. Very similar but different situation. Again, we had a much deeper look towards the weekly kickoff high in the NASDAQ than we did in the S&Ps. I think the NASDAQ performed better last week, except for the fact that we took out the low of Thursday in extended trading hours, regular trading hours, I believe, as well. So we've kind of stopped one time framing higher. We've got an inside day again today, balance day 3. We had profit taking on Friday. We lost only about 800 in open interest, which isn't that great, which isn't that big. We really want to keep in mind, ladies and gentlemen, that our acronym for the market forecast and the market recap is ACH, and it represents anything can happen. And that is very true every day. It seems more important to remember that this week with everything we've got coming out. So here's our long liquidation, a little profit taking, and where are we? Well, here's where we opened here. We are here. No real major overnight inventory with which to deal with. We're opening a lot closer to the low volume node here in the NASDAQ than the upper volume node. If you remember, the point of control in the S&Ps was up here. That's the volume point of control. The volume point of control in the NASDAQ is lower. So the market came a little bit further to the upside. Maybe it's got a little bit further to fall to the downside. Is it opening in an area of repair? It very well might be. But again, looking at the size of the value area from yesterday, inside in extended trading hours and inside in overnight or regular trading hours, I'm going to be patient. I got to wait and see if there's an opportunity for me to find better trade location as the day goes on. Okay? All right. Gold. All right. Gold is just kind of closing in on itself. It's rollover week. I've still got August on because there's still higher volume in August, but by tomorrow we'll probably be looking at the December contract. Remembering that we're in rollover, a lot of the volume and open interest things that I lean on become a little bit blurry. We lost 10,000 in open interest on Friday on a move to the upside. Did we just covering some shorts there? It's entirely possible, but again, the fact that it's in rollover makes that a little bit blurry. Range-bound rules apply. We are looking at last week's high and weekly kickoff low as the extremes of our balance. What are balance rules? We fade the extremes. We sell against the upper area of balance. We buy against the lower area of balance until proven wrong. When we are proven wrong, it should not cost us much because of the location of our longs or our shorts in the area of balance. Upon acceptance outside balance, we go with breakouts away from balance. We need acceptance, we need volume, we need participation, we need momentum on breakouts. They're very tough trades to take, but they can be very profitable either way. So where are we now? Well, we're kind of away from them. Overnight, didn't quite get to this point of control. Didn't get up to overnight, last week's high. Didn't get to this week's weekly kickoff high. Opening in range and below value, the market seems to be leaking lower. There's some weak structure down below. We've got a gap from Thursday to Friday, and we've got a naked point of control on Thursday. Below that, we've got last week's low, and we've got a pretty tight weekly kickoff low in here, 1690. Because this was all rejection. Once this market opened, it just took off to the upside. Overnight inventory to the short, took it all back and then some. So today, patience. We're short time frame controlled. We are in range and looking for new information. Well, we may get new information this week for sure. Let's take a look at the euro, which has been struggling up against that weekly kickoff high that's been there for 2 or 3 weeks. Price continues to advertise up against that level. And, when we have a supply level like this, the more often the market comes to it, the fewer sell orders are going to remain up there. We don't know what's going to happen, of course. This is a pretty weak high now. We've visited it a lot of times, and we've got higher lows and even highs. Well, day 5 here in range, that's really going to be my focus again, is range-bound trade until proven wrong. Settlement 102.35.5 ticks. Opening in range and in value. Try and stay patient. I'm going to be really patient, and I'm going to be demanding trades up near the high of balance and maybe a little bit down here around last week's low. But the real kind of area of balance I'm looking at is weekly kickoff low. Again, stiff rejection, similar to gold. Try and stay patient today. Try and stay patient. Better trade locations in most of these markets are likely to come later on in the session. That rings true for the 10-year as well. Open interest increased on 2 up days, 1, 2. We're still largely range bound. We've got last week's high, last week's low. Rates are going up. We know that. Apparently, the 10-year has it already digested the fact that we're probably going to get a 75 basis point hike in rates on Wednesday? I'm not sure about that. Take a look at the 30-minute chart. Seems to be rejecting range and value from yesterday. We've got a naked point of control that remains in, well, it was checked in extended trading hours, but we never checked it in regular trading hours. And we've got this big gap down here to a little bit more visual information down below. So I'm liking the short up here if I can get it. And, we're one time framing lower in very neat fashion here. This almost looks like Renko bars. I don't want to jump in front of this because we do have some visuals that this market can focus on, and with rates moving higher would make sense that price would move lower in established 10-year notes. Now to the vicious one. The natural gas volume and open interest are indicating a healthy upside auction, adding another 11,000 in open interest alone on Friday, breaking out above weekly kickoff. We've got last week's high. We've got a previous weekly kickoff level that I've left on here because I believe it may end up being impactful. It's actually older than last week's weekly kickoff high. Looking to buy weakness. Seems like the market is a little bit overextended. We've come a long way without any real significant pullbacks. So that weakness is going to have to be pretty good. We've got a lot of space and structure down below. Take a look at the 30. Naked points of control, gap, naked point of control. There's a lot of unfinished business down below. Doesn't mean we have to go there right away. So the market seems to be just kind of struggling at the high here. We're kind of spanning last week's high, trying to avoid using this as a long above, short below level, but I do believe it is somewhat pivotal. If we can't continue to push this market higher, I think we go and we look at some of these shorter time frame levels here. We've got another naked point of control right here. Now that would be a good target and potential opportunity for us to look to take along. I am glad I don't often trade the natural gas because it is and can be very vicious. Anne-Marie, good morning. It's good to see you, and I'm glad you say that. Yeah, the superpower this week, I just love that, is to stay patient 100%. Good to see you. The heck all matters. I'm glad that the profile information is helpful to you. And we've got group coaching today at 1 p.m. I put the link in already. I'm going to put it in again. So maybe we can hang out a little bit and talk trading. 1 p.m. Central. Take your deep breath, ladies and gentlemen. I think we're going to need a lot of those this week. Stay humble, grateful, creative, and patient in your trading. What you want to do is get through this week without any damage, 100%. Thank you, Anne Marie. You're very kind. Thank you very much. Today, Trade It Out. Thank you all again for watching. Thanks for the likes, and I'll see you soon. Trade well.